I'm Anna, the top woman trader in the world, and I help beginner traders to generate profits. In this video, we'll dive into the basics of trading by exploring the importance of supply and demand. See you after the intro. Good morning, traders! Before we dive into this ocean of knowledge about supply and demand in trading, I have something important to tell you. If you want to see how I put all these great theories we're about to discuss into practice, don't forget to check out my courses. There you'll be able to see how I trade on stocks, indices and commodities. It's like sitting right next to me as you try to tame these financial bulls and bears, but without the risk of me stealing your coffee. I hope you're comfortable, because today I'm taking you on a journey into the fantastic and a bit crazy world of supply and demand in trading. I know, some of you are already thinking, oh no, how boring, but I promise, I'll try to make everything more exciting than a TV series marathon. So, let's start with the basics. Supply and demand are like the two weights on a giant scale that determines the price of everything in the market. And when I say everything, I mean everything. From Apple stocks to the price of your morning cappuccino. It's as if there were two DJs mixing the music at the market party. If you understand their rhythm, you can dance to the right beat and maybe win the dance competition. Read, make good trades. But what exactly are these two characters? Well, demand is like the queue outside the store for the latest iPhone. How many people want to buy something at a certain price? Supply, on the other hand, is like the street vendors at the market shouting, buy, buy. How many people want to sell their thing at the same price? When these two meet at high five, boom, we have the market price. Let's take a practical example. Remember the GameStop chaos at the beginning of 2021? It was a perfect example of how demand can go crazy. A group of traders on Reddit decided to mass purchase shares of this video game store chain, making the price shoot up from $20 to nearly $500 in a few weeks. It was like watching a rocket take off. This created a huge imbalance between supply and demand, leading to what we call a short squeeze. But beware, the market is more volatilized than a teenager during puberty. Think about what happened with oil in April 2020. The price actually became negative. Yes, you heard it right. Sellers were paying buyers to take the oil. Why? The pandemic caused oil demand to collapse. No one was traveling, factories were closed, but supply was still high. It was like having a very horse full of ice cream in a particularly cold winter. Now, don't think it's all so simple and predictable. Oh no, the market loves to complicate things. There are a lot of factors that influence supply and demand. It's like we're playing chess, but on 3D chessboard, blindfolded, and with rules that change every 5 minutes. Take the economy, for example. When the economy is booming, it's as if everyone has won the lottery. People have more money to spend and therefore buy more. Stocks go up. Companies celebrate. It's all a party. But when the economy is bad, well, it's like the end of a party where no one wants to clean up. Everyone tries to sell and prices crash. And let's not forget about world events. A war, a natural disaster, even a tweet from Elon Musk can drive the market crazy faster than you can say to the moon. It's as if the market were an emotional teenager with access to Twitter. It reacts to everything. Think about what happened with COVID-19. In an instant, the world stopped and markets went into total panic. Stocks crashed faster than I crashed on the couch after a day of intense trading. But then, boom, governments started printing money like there was no tomorrow, and suddenly the markets took off like a rocket. It was like a roller coaster ride, but instead of adrenaline, our money was at the stake. There are also more predictable things that influence supply and demand, like seasons. It's like the fashion wardrobe. In summer, everyone wants swimsuits and winter coats. Into the trading world, they translate into things like energy demand rising in winter, it's cold, people turn on the heat, or travel demand exploding in summer. If you can predict these cycles, it's like having a crystal ball for trading. And then there is us, the traders. Yes, because we too influence the market with our expectations and actions. It's like a huge poker game. If everyone thinks a stock will rise, then buy it, increasing demand. And guess what? The price goes up. It's a self-fulfilling prophecy. But beware, if everyone is already long on a stock, who is left to buy and push the price even higher? But wait, there is more. There are a lot of other factors that can influence supply and demand. Think about demographics. It's like predicting the future by looking at population trends. If the population is aging, there might be more demand for R3 trucks or retirement cruises. If there is a baby boom, get ready to see stocks of diaper and toy companies skyrocket. And technology. Oh boy, this is an atomic bomb in the trading world. Think about how AI is changing the game. It's as if we had given a supercomputer to every trader. Or remember when blockchain was the word of the moment. Every company that even just whispered blockchain saw its stocks rise as if it had found the goose that lays golden eggs. Then there are the psychological factors. This is the craziest because, well, people are crazy. Expectations, consumer confidence, and even fads can drive the market crazier than a cat in a room full of lasers. Remember the cryptocurrency boom in 2020-2021? Bitcoin went from $7,000 in early 2020 to nearly $69,000 in November 2021. It was like watching a garage startup transform into a giant overnight. And let's not forget about the government. Taxes, regulations, monetary policies. It's as if the government were the DJs of the market party. It can change the music at any time, and everyone has to adapt to the new rhythm. Think about when the Fed, the American Central Bank, decided to raise or lower interest rates. It's like they're turning the volume knob of the economy. The higher the volume, low rates, the more the party animates. The lower the volume, high rates, the more become the party calms down. Now I know I've bombarded you with information as if I were a plane dropping advertising flyers, but the point is understanding supply and demand is fundamental for trading. It allows you to anticipate market movements, find opportunities, and above all, limit risk. It's like having a treasure map in a world of pirates. It doesn't guarantee you'll find gold, but it certainly increases your chances. But how do you identify imbalances between supply and demand? Well, there are several ways, and now I'll give you a taste of each. It's like having a toolbox for trading. The more tools you have, the more jobs you can do. First, volume analysis is like being a detective studying the market's fingertips. If you see a sudden explosion of volume, it's as if someone had shouted fire in a theater. Everyone moves in the same direction. It could be the beginning of a big price movement. Second, sentiment indicators. These are like the thermometer of market mood. If everyone is super optimistic, it might be time to cautious. Remember, when everyone agrees, they are usually all wrong together. If instead there is panic everywhere, it could be a golden opportunity to buy at a discount. Third, price patterns. These are like constellations in the trading sky. Do you see a head and shoulders? It could be the signal of trend reversal. A triangle that narrowing, get ready for a big movement, even if you don't know in which direction. Fourth, intermarket analysis. This is like playing 4D chess. Don't just look at your market, but also at correlated ones. If gold rises, what could it mean for the dollar? If oil crashes, how might airline stock react? Remember guys, in trading, knowledge is power. The more you understand how the market works, the more chances you have of making good trades. It's like training for a marathon. The more you prepare, the more likely you are to cross the finish line, and maybe even with some medals along the way. And if you feel overwhelmed, don't worry. We all start somewhere. It's like learning to drive. At first, it seems like there are too many pedals, too many mirrors, too many road signs. But with the practice, it becomes natural. The most important thing is to take one step at a time and not give up. Who knows, maybe one day you will be the one explaining these things to other traders. Well, I hope this chat has been useful and maybe even a bit fun for you. If you have questions, fire away, I'm here for this. Don't be afraid to ask, because in trading, the only stupid question is the one you don't ask. And remember, the market is out there full of opportunities. It's like a huge financial playground. And now you have a bit more knowledge to have fun and maybe earn in this park. It's up to you to seize up these opportunities. So guys, go out there and show that market who's boss. But be careful, the market is like a sea. It can be calm and generous, but also stormy and dangerous. Navigate wisely, always use your life jacket, stop loss, and never forget that in trading, as in life, patience is the virtue of the strong. And if you really want to understand how I handle these situations in daily practice, my courses are just what you need. I'll explain exactly how to recognize signals on the charts of stock indices and commodities, how to set a proper money management, and how to protect your capital. You'll understand in detail how I apply these strategies in the real world, with practical examples and concrete trades. Think about where could you be in a year if you started learning the right strategies today. I look forward to seeing you in my courses, where you can explore all these techniques in depth and much more. It's time to move from theory to practice. Remember, the market is out there, full of opportunities. It's up to you to seize them with wisdom, a bit of courage, and why not, with a little help from me? See you on the other side, budding traders. And remember, if you feel lost in the labyrinth of supply and demand, or if the market seems more complicated than a Chinese restaurant menu, you know where to find me. I'm here to turn your help into laughter and your moments of panic into profit opportunities. Happy trading to all!